Hey traders, this is Ron Hayden at Market Tamer. Happy Tuesday. Hope you're doing fantastic. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed with your financial advisor. Kick off here with the Dow ETF, the diamonds, up 0.3%, new all-time closing highs. They remain bullish. SPY, which I have a bullish position in, also still remains bullish. It was down 17 cents, but there is just no change in the technical picture. Same for the Qs, down 42 cents. It's still bullish. Now, the small caps, the IWM, down over 1% today, pick up in volume, even a little more than yesterday. And in last night's video, I commented that, hey, we had bearish engulfing here. This is exactly the time of year where if there's going to be a pullback on IWM or MDY, which we're going to look at next, the mid caps, this is when it happens. This is the seasonality effect. And right on cue, here they go. Look for a target, the end of June, beginning of July around 161, and then the 200-day here around 160 is coming up. That'll create a point of confluence for support. MDY, which are the mid caps, same thing. They're pulling back right on schedule. 360 and then down near maybe 353 or so, 352 would be the next target down near that 200-day moving average. And then sticking with that seasonality perspective that I talked about yesterday, here is Tandem. This stock basically 10x since April. Really nice move, went from 5 to 50. Here there's a bit of an island reversal where there's a gap up and then a gap down. We go back up, try to get up into that gap, and then reject it. And the question comes in, well, how do you know when stocks are going to turn around? And the simple answer is, more selling than buying, right? More shares are being sold. There's less bidding. But also this seasonality effect. Check this out. If I go to financial.com and I type in Tandem Diabetes, why the company has only been publicly traded for 4 years, look at how this literally falls like a rock. This is some massive pullback on a little rinky-dink stock that went up to 50, and yet the seasonality still kicks in. Over the next 14 weeks, which is essentially now between year-end, this stock drops historically by an average of 34%, 4 out of 4 years. That's 100% historical probability. So if you're trading, Tandem, and you look at a chart and you say, geez, I wonder why this is the time of year it seems to top out, you were just given the golden roadmap. This is why. Just like AMD pulling back, just like MDY, the mid caps and the small caps. These stocks are pulling back right now. Now, keep in mind, we are just a couple weeks away from when the strongest time of the trading year kicks into high gear. If I go back and I show you, let me just show you this, and I type in, let's say, the SPY, which is the S&P 500 ETF, and I move this out, and let's just say 14 weeks, you can actually see a little bit of a dip for the next couple weeks. Then the S&P goes on a run right into the middle of December, right before Christmas, pull back, and then we go up again. Knowing which stocks typically go up during the same time frame and can outperform the S&P is priceless information. Because between now and the end of the year, essentially, the S&P goes up, 76% of the time by a whopping 3.8%. That's not exactly ripping the cover off the ball, right? So knowing which stocks outperform, that's key, and that's how we can try to outperform a market. That's what I'm going to do this Friday. I had an event last week again. Tons of folks are writing and saying, hey, we missed the event. We want another chance. This Friday, noon Eastern, 9 a.m. Pacific. You definitely want to be there. You can register at the link below. Just copy, paste it, stick it in a browser, or you might get the email invites as well. Within the first couple minutes of going live, I will show you the hottest proven stocks for year end. You want to get ahead of the game now before these next couple weeks start to unfold. All right. So I have a couple other stocks here to look at, which is, first one is SFIX. This thing was down, holy macaroni, 35%. A little bit of support right where it's at. The next major support, arguably down in here. That could be 19, 22, 25, meaning 10+% lower or more. How about Pepsi? The company had earnings today at noon, broke below the previous low, took out the 200-day. There's a little bit of shelf support here right where the low was, but the next major support, your guess is as good as mine, 100, 95. So that looks like some downside potential there. I would thinking as a result of today's earnings, I'd be more inclined now to even think about some bear calls, something up in this area. How about Brazil, EWZ? One bottom, two bottoms, we're getting that W formation. Once it takes out 37.50 and the 200-day, the next major resistance is all the way back up here. I know I talked about this one before. It was such a gradual decline, then it became a little more vertical. There's a lot of potential upside here. Just keep an eye on EWZ and Facebook. Down almost 2% today. The lower support zone is the low 150s. Still maybe $6, $7, $8 away. With today's close, it did get below the previous lows in September just by a little bit. So this one is still bearish. So again, there's a webinar this Friday. It is free. It's complimentary. You can share the link with your friends. There's a maximum of 500 seats in the webinar room. Make sure you register ASAP. Get yourself in there. I'll show you how to identify the top 10 stocks for year end and more, and how to even identify when, quote, the big money seems like it's coming back in and the stocks are living up to their historical patterns. And these stocks historically blow away the S&P by 5, 10 times that little 3-point-some% move the S&P has. All right. Wish you guys all the best. Look forward to seeing you in the next video. Take care.